up, everybody? It's your boy. If you're new to the channel, welcome. If not, welcome back. Got the first video on this channel today and figured what better time than now to make a video talking about all the different tax benefits and tax write-offs you can have either in a small business or more specifically as I'm in junk removal, in the junk removal business. I'm a licensed CPA, so I sort of know what I'm talking about, and a lot of this stuff can be found online. And of course, even though I am talking about these different write-offs, different things you can do with the write-offs, always consult your own CPA, your own accountant, whoever it is. This is not meant to be financial advice or tax advice. I simply want to overview all the different benefits and write-offs you can have in small business and in junk removal. So with all that out of the way, let's jump into the top 7 best tax write-offs you can have in the junk removal business. Alright, the first write-off I want to talk about has to do with all the startup expenses and all of the expense that it takes just to get your business legitimate and get it going. So this includes stuff like getting a business license if you need one, getting insurance, because you definitely want to have insurance in the event something goes wrong. You don't want to be sued or owe someone a lot of money when you might not have it starting out. You can also deduct the fee of setting up an LLC. And you don't have to have an LLC, you could do, or you could be a sole proprietor. But if you want to do an LLC, you can write off the fees associated with that. So like out here in Colorado, all we have to do is go to the Secretary of State website, register the LLC, it's like $50 and we're good to go. If you want to go a little more in depth with it, you can get a lawyer, go through that process, or go through like a legal Zoom. This is all just going to depend on your state and how your state operates. So make sure to check into that before you get started on that, and if it's even worth it. Now while we sit here and get gas, let's talk about number 2 on the list, and that's all about the auto expenses and writing off vehicles. So there's 2 different ways you can write off a vehicle. It's either you take the mileage deduction or you take the actual expenses that it costs to own and operate the car. Being in junk removal, if you're watching this and you're in junk removal, or any other business where you drive a lot, construction, Uber, Lyft, landscaping, any of that stuff, you can choose between those 2 methods. Mileage just states that however many miles you drive for the business, you can deduct up to 56 cents in 2021 for each mile. So there's a few apps you can use to track your mileage. You can use QuickBooks. There's something called Mile IQ, that's a couple. So you can download those apps and those programs and use those to track your mileage and keep the difference between, if you use it for a personal vehicle too, you'll keep the difference between your personal and your business use, and you'll take that percentage of miles and write that off. The other way, while I'm here spending, $80 on a tank of gas, is to use actual expenses. So that's gas, oil changes, tires, tire rotation, brakes, anything it takes to maintain the car, along with depreciation. So the nice thing about depreciation is for a vehicle, you can write a car's value off over 5 years on your tax return. So for example, let's say you buy a truck worth $20,000. So with the 5-year depreciation schedule, it says you can write off about $4,000 a year on your taxes for the vehicle. So whichever one you choose for that vehicle, you got to stick with it. So make sure you talk to your accountant, which one will work better for you, depending on the business you're in. And yeah, a lot of different expenses you can use for a vehicle, so keep that in mind. And a pro tip, if you have a Costco or Sam's Club near you, get a membership because it's worth it to get the cheaper gas. All right, we're on our way to a small job right now, with a mattress and some electronics. So I'm gonna go tackle that, and once we're done tackling that, we will get back onto the list. All right, nice, quick, easy job. It was 1 queen-size mattress and 4 boxes of very, very old electronics. So good to go on that one, and now we are headed to recycle those and dispose of the mattress. And while we are going over to dispose of these items, bring us to number, I believe we're on 3 of the 7, and that has to do with the advertising and marketing. So this person I just helped, this lead came in from Google Ads. And so all that kind of stuff to grow your business is deductible. At the end of the day, marketing and sales, without those, you won't have a business because no one will know you exist, unless you just have a bunch of friends and family that use you. So Google Ads, Facebook ads, Instagram ads, YouTube ads, those are all like the digital forms of advertising you can write off on your taxes. Print versions, you've got your business cards, you've got flyers that you go drop off at, real estate offices, property management offices, storage unit offices. You've got door hangers that you can go print out and canvas a neighborhood and farm a neighborhood if you want to go that route. So there's plenty of different forms of advertising and marketing that you can write off and that you should keep track of. That way when it comes tax time, you can write all that stuff off and reduce your tax liability. All right, so we're back at home, which brings us to I think we're at 4 on the list, which has to do with the home office deduction. So if you don't have a physical office, you can actually write off part of your house that you use primarily for business as a home office. So what the rules are is it's a maximum of 300 square feet for the office. It's $5 per square foot, and the room has to be primarily used for your business and working. So right now I'm in our basement with our bar. It's not the home office, that's upstairs, one of the spare bedrooms. It's about 300 square feet, which does come out to about $1,500 in a write-off. So it's not a whole lot, but it's something that you can take off on your taxes, which will reduce your liability. Moving on to number 5 on the list has to do with eating and business meals. So usually business meals are only 50% deductible, but during 2021 and 2022 tax years, they're now 100% deductible. So if you're having a business meal or business meeting with, an investor, property management company, realtor, anybody you want to try to grow your business with, then as long as you document the time, date, and cost of the meal, who is at that meal to substantiate that it is actually a business meeting and can be deducted. With those qualifications, you can write off the entire meal. So make sure you're keeping those receipts, make sure you're keeping track of where you went and who you went with. That way, if you're ever audited, you can make sure you have that stuff set. I'm about to head out for job number 2 of the day, and before I do, figure we talk about number 6 on the list, and that is the equipment, material supplies, all that stuff you can write off. So if you can see behind me here, building this trailer out right here, everything that goes into it, the lumber, the drills, the screws, everything is deductible. And that's just for equipment and other things like that. You can also do computers. So if you have a computer that you want to use for business, buy that, write that off. Same with the trailer itself. That's considered the equipment of the business. The nice thing about these items is you can either write them off in the year that they're incurred or do a depreciation schedule, and it depends on what the item is. We can do 3-year, 5-year, 7-year, 10-year, and so on depreciation schedules, and to spread that out over a length of time instead of all just the first year. All right, lastly, and number 7 on our list has to do with employees. So when you're starting out, you probably won't be able to hire or have the time to give to part-time or even full-time employees. So let's say every now and then you just hire some help. You pay them, $20, $30 an hour or whatever rate you have. You can actually deduct that on your tax return. And if you give them over $600 in a calendar year, you need to give them a 1099. So that'll show them the income they made from you, and then the income that you paid them, you can write off. Now, this isn't an all-inclusive list. There's a bunch of different write-offs that you can do, but these are the main ones I wanted to talk about for junk removal in specifically, and small businesses. So if you enjoy this kind of content, you want to see more of this, and you want to see more business building, junk removal building, that kind of stuff, don't forget to like and subscribe on this video, and I will see you on the next one.